Hello, everyone. Happy Thursday, post NVDA day. How's everyone doing? Good morning to Rusty and Patrick over on Rumble. Good morning to Sterling on YouTube. Let's see. Well, who else is here? Good morning, John. We'll get to everything. Thank you for putting in some good news and everything. Earnings stuff, Sterling. Good morning. We also released the jobless claims from back. We had the jobless claims coming out, but we had the unemployment and non-farm payrolls for September. They are not releasing October. What will we ever do? Good morning, Royal Palms. Good morning, Odie Green. Good morning, Jacob. Good morning, Daniel. Hello, Charles. Hey, Charles, what time is it for you right now? What time is it for you? So, did I say good morning for Patrick on YouTube? So Walmart was a beat, stock up 3.83%. Realized, but even it was a good beat, being driven by upper middle to upper class sales. So even people who are pretty well off are shifting to Walmart. And it's still trading 34 times next year's guidance. Think about that. That is a growth stock, not a Walmart stock. But I'm going to still be watching for further pullbacks in that one. That's not on my list. But yeah, there could be trades in it, but it's not on my list to accumulate. There is no way, not at 34 times next year's guidance. Has NVIDIA saved the market or just provide the last hit? Well, the thing, yeah, they did have good earnings. How much, though, they're supposedly sold out of their chips for all next year? And it's mainly driven by four companies. Four companies are buying all the chips. What happened? And I have another question just on the AI thing. It's not going away. It has to get way better. But what happens when somebody figures out that there's a better way to do it versus just throwing chips and data and mass data centers, mass power at it? Sort of like these more tailored thing that the Chinese open AI models do. What happens if that starts getting adopted in this country? Just wondering. For Nvidia, it's at peak. Doesn't mean it can't go higher, but geez, it had that little mini double. So what else? Ooh, I didn't see that one. Bath Bath and Body Works. Well, I guess something's not working. It was a miss. Well, that's sort of a luxury thing. Down 17.78, but that's not something if you're tightening the belt that you're going to run out and say, you know what, I got to get my Bath and Body Works products. And look, TJ Maxx also had a strong report yesterday morning. People are downshifting because they can't afford a lot of stuff anymore, except for the high flyers and everybody, that's made a killing in the stock market, which is the upper 10%. Hammock cutting at rates prolonging high inflation. Sees elevated leverage in hedge funds and life insurers. We'll see. Yeah, there's a lot of elevated leverage right now. Thank you for putting it in all the easing monetary policy now by encouraging financial risk. Does anyone see people taking financial risk out there? I do. Oh, who else do we have here? Who else? Good morning, Tony. All right, it's 2:05 p.m. for Charles. All right, thank you. I just was wondering. Good morning, Heinrich. Good morning, Anissa. Good morning, David Atkins. Is it just me or should data push rates higher? The 830 data. Well, we'll take a look at the rate increase. I mean, the yields are sort of caught in the range right now. They're waiting to break out. Yogesh, thank you for turning in. I haven't had a bath in a long time. Well, that's okay. I'm glad it's virtual, Rick. Rick hasn't had a bath in a long time. But have you had a shower, Rick? That's key. See, you might, hey, well, I haven't had a bath. I haven't had a bath. Jeez. I can't remember the last time I took a bath. I'm not a big bath guy. But I had a shower. So, There you go. We had non-farm payrolls for September coming in 119K, expected 50K. Unemployment rate ticking up to 4.4. Average hourly earnings disappointing, expected 0.3 coming in at 0.2. Year over year, though, coming in at 3.8 versus 3.7. Then you had all the initial jobless claims, nothing shocking there. Participation rate ticking up a bit. Philly manufacturing index bouncing back a bit, but still negative. We had the continuing jobless claims. Continuing jobless claims are actually continuing to climb overall. Manufacturing payrolls contracting in September. Again, these we have some November numbers in here too for Philly Fed employment ticking up, new orders dropping drastically, prices paid ticking up also. And what do we have? We had Hammock speaking, which Sterling put in there. What else do we have going on today? We have Cook speaking, 8-week option bill auctions, Goolsby speaking. So that's what we have. And then tomorrow, oh yay, look at this. We don't even get a break from Feds. What can they say at this point? Williams, Barr, Jefferson, Logan. Then we get the S&P Global Composite Manufacturing and Services and the Michigan, because the final numbers for the Michigan consumer sentiment and inflation expectations. And big thing tomorrow, option expiration. So right now it's buy the Mag 7, buy everything, well, except for Palo Alto. Did you put that one in? That was they disappointed on earnings. It's buy Mag 7. Everything's hunky dory, buy it all. Groups, we were again expecting the bounce back. This is not shocking. I went through the whole strategy yesterday. So everything's positive today. Coming out of oversold conditions. Not shocking. It's going to be interesting to see, though, if we get follow through, especially after tomorrow. So next Monday, now remember, next week is historically bullish Thanksgiving week, but we'll see. Now we're up to a 60, close to 65% for a pause in December, and then a cut in January. A 50% chance for a cut in January. Fear and greed, we're still in extreme fear. We'll see what this takes when we open. 39.16, all the way back to the 39 areas. Thanks again for putting in the earnings, Sterling. After the close, gap, I guess, Intuit. Ross, dress for less. Hey, there you go, man. We'll see. That I mean, people might be shopping not only TJ Maxx, but Ross, dress for less. And then tomorrow morning, you don't have much, BJ's. Okay. Let's see. Quote of the day. The rates are too high, Scott. And if I don't get it fixed fast, I'm going to fire your ass, okay? Oh, that's from yesterday with Trump. Yeah, well, that was, oh boy. Yeah, let's just drop rates to 1%. Come on. Oh boy. Times are tough. Yep, because Rick's not taking a bath. Times are tough for Rick. You didn't answer my question. Good morning, Ted. Rick, you didn't answer my shower question. All right, we're getting a snapback, remember? Into the weekly rotation zone, snapping back. Snapping back. I went to the aggressive targets on the double. We're trading against the top of the rotation zone right now, just above key support. And we hit the 50% harmonic. The 50% harmonic. This will definitely be. Oh, don't do that. I wanted to move this. 50% harmonic. Remember how key this is. So, if we continue today, I'm looking at 6,800, especially 6,800 for tomorrow. And the 62.5 is 68.17. I'm not going to read 68.17.75. Not going to reiterate the whole spiel from yesterday, but that's key for the closing basis. This is unwinding. Also, did not trigger a %B buy yesterday, officially, because then you had the sell off just before the market closed, and then you had NVDA. So on any pullback, again, I'll be looking at 67.80, 67.81 area, prior topping area before the last push down leg. If we get through there, so this doesn't matter really with the double, because it lines up right with this topping area. So that's my next target, then 6,800, then 68.17. Close above 68.17.75. Then I start targeting the 75 and the closer to the 87.5 harmonic. Very key support levels. I'm looking at, on pullbacks, I'm looking at 67.50 and then 67.25. If we lost 67.25 and we lose the 1 hour rotation zone, that won't be good. I still won't do anything major unless we get major downside momentum because of option expiration tomorrow. Good morning, Jake. Rather personal, but every other day. You could have just said you had a shower every day, Rick. Oh, Rick. So that's exactly what I'm looking for there. The NASDAQ, I went to the aggressive targets on this, hit the top of the rotation zone, and all targets played out. So it's in a key topping area here. Let me just bump this down. Right there, 25,250. We get through 25,250 with some momentum. We have this declining trend line and a prior key area right around 2,400. 25,400 is my next key target, which is also the 50%. 25,380, 388 is roughly the 50% harmonic if we push up. Okay. 25,640 is my major line of sand. That's 62.5. So we have to get through that 50% of declining trend line. Remember, this is a pretty significant declining trend line. Right around this 50% harmonic. So that's the next target area that we need to get through for me. Pullback, I'm watching right around 25, just below these two tails, right around 25K. We lose that, we got 24,900. You lose 24,900, not good for the bull case. You use milk of magnesium for deodorant. All right, Rick, now we're getting personal. I agree. Now we're getting personal. The Dow did follow through with the %B buy. Again, a bounce pattern because we triggered the double. There is some pretty key resistance at this 46,725. We get above there. I'm watching closer to 46,865 to 46,9. If we roll over in the Dow, I'm watching this 46,300 area for support. And then we still have the double targets. The Russell coming back to a very key area. 2396 to 2400 is my first key area of resistance. There's a lot of overhead resistance in here. If we blow through anything with momentum, I watch for a return to the upper end of the rotation zone and the 50 EMA. But I'm going to be paying closer attention to 2400, especially going into tomorrow. The VIX, there you go with the NVIDIA beat, the big drop down. No fear whatsoever again. Back below 20. Back below 20. Sell vol, buy the Mag 7 and chips. And AI related. Buy it all, buy not everything, but buy the Mag 7. The Daxi, the little Daxi. You had the gap here. It would have had to have been done on the little 1 hour here, and then it's virtually played out to double. Was a challenging one to trade. Can we keep going? Yeah, but the overhead resistance area. The overhead, this might also trigger a percent B buy, which then I'd still watch for a further bounce in the rotation zone, and then I'm watching for next rollover. Yields. Let's just look at the yields. Still caught in the middle with you. Yields still caught in this big range. Tried to run up and break out, now dropping a little on the, I guess, on the unemployment numbers. Like, it's just caught in a range. I'm not doing anything with yields right now. Unless you're talking about the yen yields. They have been interesting. Crude, nothing. Garbage trading. I mean, it's micro trading, but I'm not bothering. Natty gas, very interesting. We don't touch on natty gas that often. Why am I looking at natty gas? Because it's trying to break out of a very key resistance area, but it has a double top, or I should say a potential double top, which means this breakout against the highs back in March, against the just above the highs from January, but as its double top triggers, it could easily pull back into the weekly rotation zone and a very key support. That's why I'm paying attention to see if this double top triggers. Gold. Gold could not sustain the percent B buy yesterday. Still holding a key support area. So I'm still paying attention to 4,045 on a closing basis if we were to close below there. But the gold has not gotten much traction. Right now, there's for short-term stuff is sit on hands. For long-term stuff, we're still holding the weekly rotation zone. Silver also, no percent B buy trigger there. Dollar index, see? Dollar index, we completed all the little mini double. I'm going to see if this triggers on the weekly tomorrow. We're right there again. Finding key resistance at the 50 EMA. So we're going to be watching for that. But this was, we had the front run, and now we've gone up to retest that area. Charles thinks gold's gone to sleep till next year. I don't know about next year, but there's no point forcing anything right now. Euro, there you go. The breakdown, not testing key support yet. So yields, look at now. These are getting overdone. I expect to see a little pullback into Japanese yields, but look at this. We touched on it briefly yesterday. Woo-wee! That is some. There's your 30 years. 30 years to new recent highs. I mean, there you go. Keep an eye on those for a pullback, which is why we also might get a pause in some things. But the yen continuing to weaken on its way to the next key target area, we might get a pullback here too. Key support coming in around 156 now. Bitcoin also, look at this. The good old Bitcoiner. We do still have a potential double. Rotation zone on the 4 hour still holding. With the NASDAQ up. Remember, it used to have some correlation with the NASDAQ. NASDAQ's up 2%. Bitcoin can't get a bid yet. I'm still going to be watching for some kind of bouncing play, but that is a bounce only at this point, potentially. Ethereum also. Nothing. Spiders key area is right around the 673. We're trading right there right now. If it continues to rally, the next major target area is 677. The next minor intermediate is 675. Those are the targets. The upside on any pullback, you're looking at the major support level right around 667.50. The Qs trading right at the 50% harmonic, right just below it right now. 613 is the real key area. Let's see. That's the wrong one. Hold on. I got to flip these. Sorry, I gave you the wrong numbers. Gave you the wrong numbers. Stand corrected. 614.17. Trading above this little key prior resistance coming potential support 611.58. The next downward support 608.50. The next major target, we still have a gap left behind, but I'm going to be watching the 6.2.5, 619.88. How would you you don't want to, you don't even bother with that, Charles. Don't even bother with that. Don't it's not don't that's going to blow again, by the way. You're going to see that going to get very interesting with a yield with the yields rising. So don't even bother with the carry trade at this point. Tesla, just a little bounce hitting the first target. What's the invalidation point for the double? That's what I'm watching right now. Is would be a close above 439.84. Other than that, I'm still watching for rollover place. NVIDIA at the first target. This had to be traded after hours, but it's going to open right around that first target on the double. And remember, between the 50 and the 6.2.5 is still a rollover zone. Could we see NVIDIA not get above this 199.71 area and roll over again? Yeah. Going to be interesting because the 200's right there going into options expiration. Okay. So your Mag 7's all bouncing. Google took a little sell off into the close yesterday, but again, nothing after hitting my 300 target and still looking for 310. 310 after this percent B buy that had to be traded on the pullback. So that's another thing. What else? What else? What do I think of GIS MO? I'm still looking at these for long-term plays. GS, I'm being very GI as General Mills, I'm being very cautious with because it's also broken below key support. I'm watching to see if it can get down closer. I'm watching for a bottoming pattern on a weekly basis, which I don't have yet. I mean, dividend of 5%, P to E 9, earnings are coming up in December. We still have the potential magnet for the 87.5. So I am being patient. It has not been able to get above a rotation zone. I'd rather not bottom pick on this and let it form a solid base. MO is holding a very key support level. I'm going to either be watching for a weekly double to form, possibly. But if we break 56, it's lighting up for me. We could see a further return, a further drop, and then re-add. If you're just, I mean, if you're in the super long term, 7% dividend yield, P to E 11, I wouldn't worry about it. Now, okay, on your monthly, you're right at the bottom of the rotation zone. That's why if that breaks, then I'm going to be watching for to reestablish other core positions closer to 50. Looks like it has another leg down. This possibly does. MO possibly does have another leg down. You know, and that would be an absolute gift. If that comes down to the 50, that's an absolute long-term gift. Okay, this is just stuff like this is even the last time they missed on revenue slightly. which is never a good sign. But this is getting pretty beat up. That's why if this cut got even further down, MO is not going anywhere. Paying a 7% dividend. So I am longer term majorly looking at these dividend stocks. They're out of style still. Everybody's chasing the chips. Chasing the chips. Would I rather own MO, even if I couldn't sell it, or I wasn't because I'm in long term stuff and didn't want to sell it? Would I rather earn MO or Walmart? Walmart, P to E 38. That's going to change a bit after this earnings report. Dividend yield 0.93. If you look at their guidance and then you look at the PE, they're trading 34 times next year's guidance. Am I going to be paying up for Walmart or would I rather own MO? Neither of them are going anywhere. But from an investment point of view, I'm not trading some Walmart up here. Okay? Because look, you're buying this at growth multiples of next year with no dividend. So dividends, a lot of these dividend stocks are just out of fashion right now. But for a long-term investment, they'll be fantastic at some point because of the yields. So put that on your back burner for investments. Put that on your back burner for investments. I'm just looking to see how these, by the way, this is not a double top. It extended too far. I'm watching the bottom of the 1 hour rotation zone on both the NASDAQ and the ES. If we pull back the ES, my first key area support is again 67.50. If we can pull back at all, the NASDAQ, choose the color of this one. The NASDAQ already hit some minor support. I am being if you haven't, well, the long pattern was already in there. So it's now targets would mean lighten up for me. And then see how this closes out the week and watch that 62.5 on both the S&P and NASDAQ. That's the only way. Would I be chasing it higher at this point? No, I wouldn't. Not with OPEX tomorrow and already the run up and everything. Can we go higher? Sure. But I would not be chasing it. With that, I shall see everyone for options expiration tomorrow. Hope you all have a wonderful, wonderful day. Charles is not trading today. Okay. I would not recommend taking a lot of risk today or tomorrow. Just don't overtrade these 2 days. Let's see how this sets. And I agree, probably until Monday. Let's see how this sets up. We're at very key areas. Let's see how this sets up tomorrow going into Monday, because there could be some good trading the beginning of next week. And then for everybody not in the US of A, it's Thanksgiving next Thursday. No markets. All right. So remember that, please. And with that, thank you everyone for tuning in on Rumble. Thank you for those watching on X. And thank you for all the YouTube people. And tomorrow, by the way, is a time to celebrate because Rick is having a shower. So we will all celebrate Rick's shower day tomorrow. With that, I'll talk to everyone later. Bye for now.